In this video, we're going to be going over exactly how much dividend income I made in the month of July from a $222,000 portfolio. That's my all-time high. And like always, to break this down, we'll be jumping into my ticker data portfolio tracker, looking at my investment dashboard, my dividend dashboard, dividend calendar, daily dividend calendar, and then of course, we're going to be projecting out what my portfolio could look like in the future to see how long it will take me to achieve my long-term goal of one day living off dividends. And like always, if you'd like to download this spreadsheet or also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, like I just mentioned, my portfolio is at an all-time high of about $222,000, and around $62,000 of that comes purely from gains, which is obviously great. And there was a lot of news in the past week due to the fact it is prime earnings season, and many of my larger positions performed extremely well. For example, the largest position in my portfolio, Microsoft, just continues to perform phenomenally. In fact, the stock is now trading right at its all-time high. In the last year, it's now up about 26%, and if we look at the last 5 years, up 161%. So if we zoom in and take a closer look at my Microsoft position, we can see my position is now up over 102%. Now, on top of this, I have a couple of high yielders that are performing extremely well also, and one of those is going to be Altria Group, stock ticker MO, in the last year. This company is now up about 22%, and on a total return basis, it's closer to about 30%. Now, when I invested in this stock a few years ago, it was definitely a contrarian bet. Due to the fact this stock had a high yield, a lot of people were expecting this stock to die, but it's so important that we understand, just because a stock has a high dividend yield doesn't mean that the dividend is necessarily at risk, and it doesn't mean it's a bad business. At the end of the day, it's always about the underlying fundamentals. And at the time when I added Altria, when it was trading between around $44 to $40 per share, to me, it was pretty clear there was a prime opportunity there, and that investment has certainly paid off, and in fact, in their recent earnings report, they even raised their 2025 EPS guidance. So again, last week was a great week for the larger positions in my portfolio. Let's start to dive into this just a little bit more. A couple things we need to point out. Right now, cash position is sitting at about 7.9%, so I'm about 92% allocated to stocks. Total holdings is around 28. I'll continue to try to trim this down to about 25 to get closer to my highest conviction plays. If we come over here and look at my cost versus market value, we can essentially see how much I've invested into each of these positions versus how much it's currently worth. So for example, Microsoft, I've invested about $9,000 total, but the market value is over $18,000. Again, that's because I'm up over 100%. But if we come over here and look at my growth chart, we can see there's plenty of winners in my portfolio, but a few of them have really paved the way. And the most obvious one right here is Broadcom, a stock that just continues to outperform and continues to grow their dividend at an extraordinarily high rate. I'm up about 480% on this position. JP Morgan, I'm up about 184%. Caterpillar, 152%, Microsoft, 102%, and Jefferies Financials, a lesser known company, but a stock that I'm actually up close to 96% on. But like I mentioned, there's plenty of other winners. In fact, I have a few high yielders that I was able to buy in at a great valuation and still do quite well on. For example, EPD. This is a high yielder that I'm up over 61% on. Like I mentioned earlier, Altria, I'm up about 62% on, another high yielder. We can see Bank of America, I'm up about 81%, and Domino's Pizza, a very underrated dividend growth stock in my opinion, I'm up close to about 44% on. We keep moving forward. Visa, one of the larger positions in my portfolio, I'm up about 56.35%. We can see Cisco, probably the smallest position in my portfolio, but I am up about 64%. And then my Apple position, 52%, and Waste Management, another stock that's done really well after releasing earnings, I'm up about 51%. Now, of course, we do have to show the losers as well. Target stock down about 21%, Novo Nordisk down about 22%, and UNH down about 36%. So UNH, Novo Nordisk, both pretty small positions in the portfolio overall, but one of the other companies I recently added was ASML, which I'm pretty excited about over the long term. Now, if we scroll up, we can see my diversification by each individual position. Like I already pointed out, Microsoft, a big position at about 8.1%, Visa, about 6.7%, and then when it comes to the other individual positions, yes, Broadcom, a big position at 4.2%, but it's fairly well diversified other than that. But then, of course, I have my allocation to the Dividend Growth ETF, SCHD, which continues to grow its dividend at an extremely high rate every single year. Now, if we look at my allocation by individual industry, we can see technology other than ETFs is my biggest sector. Financial services at about 12.1%, consumer cyclical 6.9%, and real estate around 7.1%. And then a little bit allocated to healthcare at 4.4%, consumer defensive 4.6%, and industrials about 3.5%. But now let's go ahead and answer the question that everyone wants to see, and that's how much dividend income did I make in the month of July? So if we jump over to my dividend dashboard and go ahead and zoom in on my historical monthly dividend income, we can see in the month of July, I made $294.14 in dividend income, but I do want to point out that doesn't paint the full picture for a multitude of reasons. For example, you can see how much I actually get paid out depends on which stocks are paying dividends which month. So really the best way to look at this is what's my monthly dividends averaged out every single month. And if we look right now, my average monthly dividends is sitting at about $561.55. That's pretty exciting to think about, but even that doesn't paint the full picture. That's because the majority of the holdings in my portfolio are dividend growth stocks. What does that mean? It means they increase the amount they pay out in dividends every single year, and over the long term, this can actually help you maximize dividend payments. Let me show you what I mean. Yes, we know we're looking at an example of dividend growth stocks in the red and high yield in the blue. And yes, high yielding stocks are going to pay out more in dividends immediately, but over the long term, dividend growth stocks pay more because they increase those dividend payouts every single year. Now, this example is if we don't reinvest dividends, but even if we do reinvest dividends, the same is still true. It would just take longer for dividend growth stocks to surpass high yielding stocks. Now, this doesn't mean that in every example that dividend growth is better than high yield. It really depends on your goals and where you are as an investor. And the best way to visualize this is with the dividend growth pyramid. Essentially, the longer your investment time horizon, the more you should be focused on dividend growth stocks. Stocks like Costco, Visa, and Lowe's that grow those dividends at double-digit rates. But the shorter your time horizon, if your goal is to live off dividends, the more you should be focused on high yield opportunities. Now, this is where I want to talk about something I'm very excited about. I get comments asking me all the time, if I was starting from zero and building a portfolio from scratch, what would I be investing in? And alternatively, if I was looking to maximize dividend income right now and looking for high yield sustainable dividends, how would I build a high yield portfolio? I get these questions all the time. So what I'm going to be doing is over on Dividendology.com, I'm going to be building 2 real money portfolios, 1, a dividend growth portfolio from scratch, and 2, a high yield portfolio from scratch. Again, these will be real money portfolios where I set aside some money to build a dividend growth portfolio from scratch and to build a high yield portfolio from scratch. Again, if you want more information, check out Dividendology.com at the link in the description, or you can also just scan the QR code that I'm putting on the screen right now. I'm pretty excited about this. I'll be launching it here in about a month. And along with this, I'm also launching the Dividendology database, where I'm going to be providing in-depth data on some of these lesser known asset classes, such as covered call ETFs, for example, which you might have already seen part of my covered call ETF database that I'm building out. I've been providing it for free, which you can also download this at the link in the description. It links directly to the different funds and has in-depth data on covered call ETFs, such as the yield, assets under management, expense ratio, how frequently they pay out dividends, options moneyness, portfolio options coverage, and whether or not net asset value has grown since inception. These are absolutely vital metrics that you need to know when investing in these types of assets, but unfortunately, most websites don't provide this information. You can't find it on Yahoo Finance, Seeking Alpha. You really have to go to the fund's website and start digging through reports. So I put a lot of effort into building this out, and I'm providing this one completely for free, link in the description. So if you're not over on Dividendology.com, you're missing out. There's a lot of exciting things coming. But back to the portfolio update, like I pointed out, average monthly dividends $561 a month, and expected yearly dividend income at $6,738.64. Now, this is where we have to really change our way of thinking when it comes to dividend income. For the longest time, we've been told retirement is an age, maybe you retire at 65 or 67, but that simply could not be further from the truth. At the end of the day, retirement is when your assets can pay for your cost of living. And the beauty of dividend growth stocks is, yes, I'm reinvesting those dividends, and the stocks I hold increase those dividends at a high rate. So even if I don't add new capital to my portfolio, this number will continue to grow at a high rate every single month. And in fact, we can see that visualized. Look at my projected annual dividend income charted out since September of 2022. Back then, it was only projected to be $1,345 a year. But every single month, this continues to grow at a high rate. The only reason it dipped down a little bit right here is because I decided to sell out of some of my positions, but then it resumed climbing. This grows every single month, much unlike our portfolio, which can be very volatile. For example, we saw back a few months ago, Most people's portfolios, including mine, dropped by 10, 20, or some even 30%. But when you're buying these high quality dividend paying stocks, the amount you get paid out every single month continues to increase. It's such a satisfying thing to see. On top of this, if we zoom in, we can see, yes, my portfolio value, it fluctuates a little bit more, like I said, but overall, there's a clear trend. We're continuing to grow our portfolio value. If we look at my dividend yield on cost, this is an interesting one because again, this isn't dividend yield, it's dividend yield on cost. How much am I being paid out in dividends from my original investment? Let's look at a couple of quick examples because right now we can see my yield on cost for Altria is 9.27%. I'm getting paid a lot. But if we look at the starting dividend yield for Altria, I'll jump over to the dividend breakdown sheet. We can see right now, Altria is only yielding about 6.6%. Now, obviously, that's still a high yield, but that's significantly lower than my yield on cost on this position. Why is this the case? Well, again, I'm trying to get this in your head. It's because Altria grows their dividends at a high rate. But along with this, I was also able to buy in at a great valuation when the starting dividend yield was high. So when you buy stocks that grow their dividends also at a good valuation, your yield on cost continues to climb higher and higher. Altria is a clear example, but there's plenty of examples of this in my portfolio. Look at EPD, 9.3% yield, and if we look at EPD on Seeking Alpha, we can see the yield right now is about 6.93%. My yield on cost is significantly higher and continues to be that way. The same would be true if we look at JP Morgan. We can see my yield on cost almost 5%, when their starting dividend yield is closer to around 1.5%. Broadcom, my yield on cost, 4.43%, when their starting yield right now is below 1%. Now, the other thing I like to track that doesn't get tracked by most investors, which I think is a critical mistake, is dividend income by industry. Yes, we track our allocation by individual stocks and by industry, but it's important if we're looking to live off dividends that we diversify where our dividends come from. Because, for example, we can see right here, real estate only makes up about 7% of my portfolio, but if we look at my dividend income by industry, real estate makes up about 12.7% of my dividend income. So even if your portfolio is properly allocated, you can still have too much dividend income coming from one industry. You can feel like you're properly diversified, but that not actually be the case, especially if you're looking to live off dividends. So this is something to pay close attention to. Now finally, if we come over here, we can see my dividend income by each individual stock. Altria, big dividend payer, the same is true with Vici. SCHD, obviously the ETF, pays about $3,700 every single year. But for the most part, we can see this is fairly well diversified. Now, let's go ahead and jump over to my dividend calendar, and we can see exactly which stocks have been paying me dividends and for how long. And one of the things that I love about dividend calendars is it allows you to easily see dividend growth and visualize the dividend snowball over time. And the example I always love to give is Realty Income. Now, the reason they're a good example is because they pay dividends on a monthly basis, as you can see here. So back in January of 2022, Realty Income paid me $5.83 in dividend income. But if we keep moving forward, we can see every single month that number continues to increase because I reinvest dividends and they grow their dividend payments over time. So just a few months later, the next year, it had grown to $21.36. Keep moving forward, we get to $26. Keep moving forward, we're at $27, $28. And if we look at this most recent dividend payment, $29.45 this month. So we're about to hit $30 a month from Realty Income, and every single month that number continues to increase. So let's just zoom in a little bit more and see exactly which stocks paid me dividends in the month of July. We have Coca-Cola at about $23. Altria, my first $100 dividend payment from them. Realty Income, close to $30. Vici Properties, $124. JP Morgan, around $15. And then a very small payment from Cisco at $1.77. So it looks like I only received about 6 dividend payments in the month of July. It was an expected lower month, but still great at about $300. And my average monthly dividends continues to increase. Last month was about $1,172. Now, if we keep moving forward, let's look at my daily dividend calendar. We'll need to zoom out just a little bit, but what we can see is we're basically seeing what day I was paid dividends. So July 1st, I got paid about $23, a big day on the 10th, $224, and then close to a $30 day on the 15th, small day on the 23rd, and then on the 31st, about $15. Now, we can see 2025 total dividends, $3,537. Last year, it was about $5,937, so plenty of time to surpass that, obviously. If we look at 2023, it was $3,474. So I've already passed my total dividends in 2023, just 7 months through 2025. And if you look at 2022, total dividends was only about $1,289. So again, we're seeing that snowball effect continue to take place. But lastly, let's answer the question, how far away am I from being able to achieve my long-term goal of one day living off dividends? And I've built out a model to calculate exactly that. And if we zoom in, we can see some of the assumptions. Here's my starting portfolio size. We're assuming share price growth of 7% and a dividend growth rate of 7%, which is actually a little bit below historic market averages. And then we're assuming a starting dividend yield of about 3.5%. Now, the long-term goal is monthly contributions of $2,500. Some months are higher, some months are lower, but that is the long-term goal. But based off of those variables, we're again able to model out the next 30 years what my portfolio will actually look like. So what's the results? Well, before we look at that, we also have to ask myself the question, what will my cost of living look like? And obviously this will change over the years, but we do need to model it out. But assuming $4,000 monthly cost of living and inflation of 2%, which, yes, to be honest, that is the historic average, but it'll likely be higher. But the point is, your cost of living continues to grow over time. So your dividend payments have to be growing at a rate above the rate of inflation. This is why dividend growth is so important. But if we look at my cost of living versus projected monthly dividend payments, right here where they surpass each other is the point at which I could live off dividends forever, even if I stop reinvesting dividends because my dividend growth rate is above the rate of inflation. So let's see exactly how far away this is. We'll go ahead and zoom out. We'll start scrolling down, and we can see after about 5 years, no, I still can't live off dividends because my monthly dividend payments isn't above my monthly cost of living. If we keep scrolling down, we can see after 10 years, looks like I'm still not there, but monthly dividends would be about $3,588 at that point, which obviously is pretty life-changing. You could easily get a part-time job with that much monthly dividends. But if we keep scrolling down, we can see right here, a little bit into year 13 is the point at which I could live off dividends forever because my monthly dividends is above my monthly cost of living and my dividend growth rate is above the rate of inflation. And at this point, my account value would be about $1.8 million based on about $600,000 of total contributions. Now, obviously this is awesome, but the true power of compounding is visualized on a long-term basis. So for example, if we jump all the way back over to my investment dashboard, look at my future portfolio outlook. Assuming I'm reinvesting dividends in 15 years, I could be making $73,000 a year in dividends. Now, if I don't reinvest dividends, it's a different story. It'd be about $48,000. But look at 30 years later, even if I don't reinvest dividends, $162,000 in annual dividends, and if I do reinvest dividends, $380,000. That's pretty mind-blowing, and it really goes to show you the power of dividend growth investing over the long term. So there you go, that's exactly how much I made in dividend income in the month of July. Again, like always, if you'd like to download this spreadsheet and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Also, be sure to check out dividendology.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.